Hello guys, welcome back to my YouTube channel. I know it's been a while since I dropped any breakdown, so I just felt like this was a good opportunity to drop this breakdown. And this is a trade I caught from July, right? From beginning of July. We're in the second week of July right now. And I felt like I would share this trade breakdown. So without wasting much time, right? We're looking for price to sweep a liquidity, which is this liquidity in July, right? So I think I'm going to explain this session for you guys first, right? So you're looking to trade one particular candle, right, which is going to be a CRT candle, but in a trading session. And your trading session can either be monthly, right, weekly, daily, or 4 hour. So the open of the monthly candle, so the end of the monthly candle, that's your session, right? As you can see, this is the open of the month of June till the close of the month of June, right here. You see that's your monthly session. So inside of that monthly session, you're going to see price sweep liquidity like it did right here. This is liquidity from a previous session. And this is what we have here, your total soup, right? Swept the lows. And then you see this total soup right here, which is this CRT right here. You see it happen right here. You get your buy inside of imbalance, right, to target the highs. So this candle 1, 2, 3, right? I'm going to view them as a 3-day candle. We're on the daily time frame right now. So I'm going to view it as one candle. I'll mark this low. And then I mark the highs. So price coming to total soup this low. There's imbalance here on the lower time frame. Reactive from that imbalance and you get your buy. But now I'm going to do a fresh analysis on the trade I took and we can see a very good explanation. So price is running up aggressively after taking these lows. Price is running up aggressively. How do I know when the market is going to reverse? It's very simple. There are two main reasons why the market moves. One is to take out highs and lows, right? And then secondly is to cover imbalances. Those are the only two reasons I believe the market moves. So if I see the market running up aggressively like this, I know it's going to take out a high or it's going to take out an imbalance. So looking back as far as I can see this high right here. Now these highs, this is the year 2022 highs. This is 2022 highs, right? This is a blue indicator that shows me the yearly open, right? So the yearly opening price rallied up and then down. So this was the high of the year. And now price is coming to take out the highs. So now this is where I got my trade from, right? Price has taken the high of 2022. And so I'm expecting a CRT candle like this to form since a major liquidity has been taken, right? I wait for the next candle. So now this is an inside back candle. I have a lows and I have the highs. Now I'm not just going to, I'm going to wait until price takes either the highs or the lows. Let's assume price came down and took the lows and then bounced back in. I would be willing to buy to take price up and vice versa, right? If price comes up and takes the high first and closes below, I'll be willing to sell to come down. So that's as simple as it is. All right, so this is where I got my trade from. Now this is Monday and also the beginning of a new month, the beginning of a 3-month candle, which means this is the beginning of a new quarter. This is also the beginning of a new month. And now price has taken the highs, right? And it rejected it. Now this has now been confirmed a CRT high for me. And then I can label this a CRT low. Now I'll be looking for sales now because I want to take price down to take these lows, right? And also probably to take tap into this liquidity, if you understand what I'm trying to say. So now I'll go to the 4 hour, go to the 1 hour. I'm looking for imbalances now, right? And this is the imbalances I can find right here. So I have two imbalances right here. I have this first imbalance, and then I have another imbalance right here. Now, in most cases like this, right, when you have two imbalances, you ask yourself, what do you do, right? The best thing to do is to take um from you cover both imbalances, and also I'm going to show you the best place to put your stop loss, right? Okay. All right, so this is what's happening now, right? Price has taken the highs and we're going into here to take. So you can take your entry from any of these two resistance. You can take from the CRT high or from the turtle soup high, whichever one. But when you want to place your stop loss obviously has to be above the candle that swept the CRT high, just like this. Right? Your stop loss has to be above this candle that swept the CRT high, because if this is a daily, let's assume this is going to be a daily candle or a weekly candle, right? Then this high is going to be the high of the daily candle, and then price is going to come down to create the low of the candle, right? The low of the daily candle. So you want to put your stop loss above here. So when you go to the daily candle, you'll be catching the highs. You'll be catching your entry at the open of the daily candle, because your entry is just going to be at the opening price. This is how it's going to look like on the daily candle, but this is going to be maybe 4 hour or 1 hour, but it's going to be open of the daily, close of the daily, and you're going to get this on 1 hour or 4 hour, right? And then on the daily time frame, it's going to be a 1 day candle. Your entry is going to be at the open, stop loss at the high, and then wherever your TP is supposed to be. So from this candle highs right here, this is the total soup, right? This is your CRT high, and then this is your CRT low. So that's about 1 to 2.3, right? So even if price decides to come up and test this high, it is still going to fall down, but it can decide to also go from here. But even if it goes here, you want to make sure your stop loss is at the highs, because you can also see there is a clean total soup right here, right? And then overall, if you want to keep trailing your stop losses, right, you just keep attacking all the lows until price gets into this imbalance. This is a very clean imbalance because the imbalance is sitting right below a weekly open, right? As you can see, the week opened, went up, came down to turtle soup, a daily low, and then rallied up, and price has not come here. We also have the monthly opening price right here, so I can move this daily imbalance down just to fit right here. So we also have the monthly opening price right here, and we have these lows right here. So all of this would just be a target for us to come down into these lows. Now let's see. Right now on our way down, right, what we do is we keep on using every single imbalance as a point of interest to sell. we have this imbalance right there, right? We can see how price came below, use the weekly opening price to continue selling. So if after price broke down like this, we could have gotten another entry just from there. Price sweeping these highs. That's going to be liquidity, not total soup. And then you see how price reacted from that imbalance, right? So definitely another entry, but I didn't take any other entries. I just left it like that. Eyes just below the candle that has the imbalance, and they keep trailing. And then, like I said, every other imbalance that keeps coming up, you just keep adding more sell position. Like we have this imbalance, we wait to see if price is going to come into the imbalance, and then we look for more CRT. Okay, that's it. Price swept the low. Now, because this is a daily time frame, right? This is a daily open price. It rallied, came back. If you're selling, right? If you're expecting a bearish candle for the day, if you think that day is going to be a bearish candle, right? Then you want to see price manipulate above the daily opening price, because when price opens and goes up, manipulates, and then comes back down, it creates the wick of the candle, like I explained earlier, right? So stop loss just probably above here or just somewhere around here. Since it's already rejecting, I'm not expecting it to go higher. You could probably target the lows. Okay, we have another day right here. You can see our price melted, came back, right? Now this is the open of another daily candle, right? This is the open of another daily candle, and exactly the same thing. Price took all these highs, which was a daily high, right? So if this was a daily candle, right? This was a daily candle, this was the high of the daily candle. And this particular day opened here and then took the highs of this other particular candle. A different way I can make this very clearer is by separating the days. Now it's even more clearer, right? And also, the CRT low has been taken, right? The CRT low has been taken, so that confirms our CRT bias first. CRT low has been taken. Then secondly, now price is trading below the daily open, so it just continues to go down. Now I'll go back to the 4-hour and the daily time frame so I don't waste too much time. Now we can see our price swept the highs and then melted to take the CRT low. Now in most cases, whenever price breaks below and closes exactly like this below the CRT low, that tells you that we're going to have more sales position coming in. Now I want to also show you something that happened here. We've looked at the entries on lower time frame. Now I want to also show you on higher time frame. Now looking at what happened here, right? Price closed below the CRT low, but when it came back up, it swept this liquidity, right? And then there is an imbalance right here, which it tapped into again, right? So that would be your second entry. So immediately swept this low and closed below. That would be a signal that price wants to continue to go down. And now price opened, came back to the CRT low, right, and tapped you in again. So you would have gotten another entry from your CRT low. This is without even going to a lower time frame. Do you understand? This is without even going to a lower time frame. And now all of these lows are targets. So now we just draw this down again, expecting price to come and test the 4-hour imbalance, right? Let's see. Yep. And there we go, right? Now, as you can see, price came to take this low, and there's a reason why it came to take this low. Now, both of these trades we are taking executed on daily time frame, but you can also see a very clean, clear structure. Exactly how it happened on daily time frame was exactly how it also happened here for resale, right? So it's just rinse and repeat. Now, if we go to the weekly time frame, we're going to see a very clean sell for a CRT candle, which is right here. So look at this, CRT highs and then CRT low. So this is exactly what I just drew out here, right? Price coming into a key zone, right? We already established the fact that this is a yearly high that the price took out, right? After taking out the highs, what did this second weekly candle do? It took this weekly candle's highs and closed below, and that's giving you a sign or a signal that price is coming for the lows, and so price kept selling. So this is how I use CRT to catch my trades, to organize my trades, my bias, and my perspective whenever I'm trading. I hope it's clear enough, because honestly, I tried to just explain it as simplest as I can, right? Now, if we were trading the weekly CROT, right? If we are trading this weekly CRT, immediately this candle closed above, right? Took this highs and closed. For this next week, you'll be expecting sell. So you can see how this candle, this is the opening of the week. I'm going to mark it out. When you come to the daily time frame, you can see how the market opened, came down and tapped it again, came down, gave almost 2 to 3 entries right here, right? And also it's easier to just know that you're going to be selling for that week, since price has already taken these highs and tapped into this imbalance. Of course, it's obvious that this is a pin bar candle, right? So it's very, very obvious that this is where you get your entry from. So price tapped in twice, came back, gave another entry twice before finally meeting to take out the low, right? So without doing any much analysis, this is everything I want to explain today on this call, and I honestly hope that it's as simple as I tried to make it, right? I hope it's as simple as I tried to make it. The CROT, turtle soup, and then close. So yeah, that would be all. If you have any questions, if there's anything you probably don't understand, you can just leave it in the comment section. And if I'm gonna do another analysis like this, then I would go through the question and make sure to answer them in the next video. Thanks for watching.